What's up, everybody? My name is Andres. I am a founder of Table Cafe. This is my podcast, and I'm also a software founder in the Bay Area. And I'm joined by a great person here I met in one of these events that we attended in the Bay Area. Thiru, please introduce yourself as well.
Hi, everybody. This is Thiru, co-founder and CEO of dooh, which is an OOH automation platform.
Right. So the intention here is to really just have a very casual conversation of what founders are building. I think what you see in the media, particularly coming out of the Silicon Valley area, is the biggest story, like the biggest winner. But then there's us, the founders are early stages, and trying to raise pre-seed, seed rounds. And I think we don't have that platform. And so here's our story. Drew and I are going to have a conversation around our companies, our next steps, where we're headed, what we've seen in the Bay Area from having conversation with angels, investors, and VCs. So, to give you a bit of a background, I've actually been in the Bay Area for the past 4 years now, and I've been an entrepreneur for the past a year and a half, actually. I started originally with a recruitment platform idea, and then I kind of pivoted to building into the finance space. And the reason why is personally, I have a finance background as well. And so it just felt a natural progression for me. And also, I think building the B2C space is quite difficult. Ultimately decided that was not the route that I personally wanted to go for. But here I am. It's month 6 since we started building our B2B.
Sweet.
Yes, it's been it feels like a long time, but it's only 6 months, and no, it's been a great experience for me. But what about you, Drew?
Thank you, Andres, for that context. It's been month 2 for us in the sense
Mm-hmm.
of actual launch and going to the market. But yeah, I think this is an idea that me and my co-founder has been thinking about for quite some time now. Yeah.
So you are basically your companies are very interesting. I think your product is very interesting. If you can, kind of go into the details, whatever you can share, obviously, because I know you're pre-seed as well. But if you can give us some context around that.
So, Andres, I think, put it plainly, we are going behind the fact that it takes a lot of time to plan and launch a billboard campaign. And when I
Yes.
say billboard, I'm not just saying the static and the digital ones that you see, but also the transit,
Yes.
OH, media, and the street furnitures as well. Let's all call them under the same umbrella as billboards, right?
Right.
It takes a lot of time to plan and build one. How much exact? It's about 6 months, as per companies like Delve and Clay, which
Wow.
have come out with their playbook for
Yeah.
OH in the recent past. And that's the idea. That's the problem we're solving.
And so, yeah, you're probably driven on 101 and you see all these billboards. So you guys are basically trying to create a platform where people can kind of like sign up for the space, and then they can basically procure the space and their billboards and pay through your platform, or is that kind of what the intention is?
So it's the entire life cycle, Andres. So if you take for example any brand that wants to launch a multi-city campaign, let's say New York, San Francisco, and Chicago,
Yeah.
for example, it takes a lot of time, anywhere between 8 to 10 weeks, for the agency to suggest the best inventory that works for your brand in these cities. And they do that by a lot of metrics, a lot of traffic, a CPM, the exposure, and contextually making sense locations for you as a brand, right? And this is a very human driven process today. A lot of agencies have people called the media planners,
Yeah.
either on contract or on freelance or in house, to go ahead and plan the entire campaign for you. So, this is stage one. And like I said, stage one takes anywhere between 8 to 10 weeks, in some cases, even 12 weeks. And then the next phase is creating your assets for this. You might have a design from your creative team, but that design needs to be adapted for various form factor, right? It needs to be, some of the assets might be on a or a Muni bus, or on a BART train, or on the MTA in New York, and each of this is different dimensions to begin with, right?
Mm-hmm.
And even in the static assets, you see different dimension of billboards. So adapting the design that you already have into various dimensions is a big effort and cost.
Right.
And also, of course, creating something from scratch. For example, not many brands would have the time and means to create billboard specific assets. And I mean billboard specific in the sense, one is dimension, yes, that's the simplest part, but also the messaging, that it needs to make sense and as less words as possible.
Right.
And there are certain colors that don't work for billboards, etc. Creative as such takes the next 12 weeks after the first 12 weeks of planning.
Wow.
And this put together is 24 weeks. And like I said, companies like Delve even in the public release that they have done on their billboard campaign, you can see how much time they've taken to do that.
Right, right.
Yeah.
And so in terms of like this process, obviously it takes a long time. So you are also aiming to reduce the cost, like the like preparation prior to the campaign, and also cost, I'm assuming.
Absolutely, Andres. So, by the virtue of building an intelligent planning platform,
Uh-huh.
wherein our AI suggests the best inventory for them, or
Hmm.
planners could even collaborate with our co-pilot
Hmm.
and throw questions or strategies that they're thinking of, and we bring it up in front of them. Right? By the virtue of solving this, a lot of research cost is being saved at the agency side because when I mean research cost is both the first party data cost and the time and effort it takes for the researchers and planners to put that together. So
Okay.
at the cost of what could have, what now powers, let's say, one campaign, you could
Uh-huh.
now power next to 20x more campaigns in the same cost.
Wow. That's a huge difference actually. So I'm assuming your ICPs probably middle market and enterprises.
Absolutely. So anybody who would want to do a billboard campaign, and by that sense of the word, it doesn't make sense for you to just put up one billboard asset because unless
Yeah.
you're an injury lawyer and you know exactly where your audience are,
Right.
in which case you will just take the biggest one in that neighborhood. For brands, especially, the inventory makes sense.
Hmm.
And with the average value of $10,000 to $20,000 per month, it easily runs into hundreds of $1,000s per campaign.
I see.
In fact, Clay, and revealed that they spent close to $1 million on the campaign in just 2 cities last year.
And
This year,
so
sorry. Yeah.
that's a huge market, actually. I think, particularly in the US, like driving down the highway, all the marketing stuff. I think there's a huge market opportunity right there to centralize in one platform to allow people to, be more efficient in planning their campaign as well, because there's a lot of costs associated with that, right? And in terms of AI, is there any specific, like, how are you guys approaching using AI when it comes to
Wonderful.
campaigning?
So, Andres, what we're doing is flipping the current model on its head. So, the current model is you have a map based interface. Many such incumbent players have this kind of interface where you could apply the filters that you want to filter off or want to see the results based on.
Right,
And you, as a human, make your own decision as to what inventory you want to go after. Now,
right.
this is flawed in the sense because you are leaving the strategy part of it and the creative part of it to the human in the layer. Right? So, but
Exactly.
what we do in over our side is move away from this deterministic approach and go after the probabilistic approach, where we try and simulate the daily path of the brand's ICP. For
Hmm.
example, if it's a training shoe company, we understand where would runners be in the city on a daily basis.
I
So,
see.
for example, if it's New York City, we highlight the locations around waterfronts or parks or dog parks, anywhere where people could be caught running, right? And of course, fitness centers or even restaurants that are into health conscious palette, right?
Mm.
So we flip it on its head, like we are going to do away with filters and instead come up with a direct outcome based on strategies we're thinking of, right?
I see.
Of course, filters are inbuilt. Like you could ask the platform to filter based on any parameter that you would like to, but that is a supplement to the overall decision taking.
I see. And I wonder, how do you land on this idea? Because like it's an interesting idea, but it's also like very niche. Do you have?
Absolutely. So I think I'll need to take you back to where I started.
Mhm.
A quick recap is 10 years ago, back in 2014, 11 years now, is I came across a technology called virtual reality and augmented reality.
Okay.
I was in my second year of mechanical undergraduate degree,
Right.
and I could connect the dots that, hey, this tech is super useful for the enterprises. So I jumped in and, along with my erstwhile co founder, started something called XR Labs. We started as Metaverse to begin with, and then we rebranded to
Okay.
XR
Okay.
Labs. People couldn't, spell the word, so we rebranded. That's
Well,
a
now
funny story.
metaverse is kind of there, right?
Yeah, it's yeah, 2020 we were like, please tell me we still own the domain, but no, we didn't.
Right.
But yeah, so that was fun. Did that for 8 years. Took that technology to a lot of enterprises from manufacturing, retail, semiconductor, telecom, pharma, defense, anything. Think of a vertical we were there,
Yeah.
except for BFSI because they don't deal with tangible things to begin with. So along that journey, I spent a lot of time an equal share between CMOs and CHROs because we were building learning simulators for the learning and development teams, and we were building marketing experiences for the CMOs. In
Right.
fact, we built IKEA's VR showroom in the MENA region, Middle East and North Africa region. It was the world's very first virtual reality showroom for IKEA. So I already had a lot of conversations with agencies in the past in past life,
Right.
and the last 2 years I spent with an American MNC that's based out of Chicago. It's a 160-year-old company based out of Chicago, doing the same thing but under the platform of this MNC,
Okay.
and that brought me a lot to the US, and also of course a lot of meetings that I had to drive between,
Right.
and that brought me to a lot of billboards, right? So I remember thinking to myself, hey, many of these billboards have a number on them that you have to call to go ahead with the booking process.
Yeah. Yeah.
I remember thinking, hey, this is, late 2020s, early 2020s. This can't be how it's done. This almost feels like pre-internet era, right? So back of the mind, I'm working on this idea as such. Okay, what's really wrong? What's happening? A lot of casual conversations with CMOs in my Rolodex and a lot of people that I came across over the last few
Mhm.
years to try and understand just how bad it is, right? And it turns out, yes, there are platforms that allow you to go ahead and see the inventory in a particular city
Right.
and add them to the cart and go ahead with the purchase process, etc. But it still doesn't solve it because the biggest gap is you as Andre, you don't. Let's name a city that you haven't been to. Give me any top 2 cities that you haven't been to, but you wished you did.
I haven't been to Boston yet, and I would love to
Perfect.
go there.
Me neither. Yes. So imagine like you had to plan for your particular brand a campaign in Boston because it's
Mhm.
a good fit for your ICP, right? When
Right.
I mean been to, it's even for the cities you've been to, it's not like you understand the demographic of each street
No.
and each lane, right?
No.
And the points in which people tend to, focus on, right? So that gap is still there, and that's when agencies bring in the planners to use the current marketplace tools to figure out the inventory for them. So this
Right.
is a gap where there is an attempt to automate it, but it's still being forced to, used by people, right?
Mhm.
So they say that the chain is only as strong as the weakest link, right? And
Exactly.
the planning was the weakest link in many of these marketplaces out there. And that said, I also saw the creative production taking a lot of time, etc. So, like I said, 6 months is not a way to work in 2025. But that being the very local aspect of things, like, why it makes sense to jump in. From a conviction point of view, why me and my co-founder truly believe this is what we must dedicate the next decade for. I've always been a decade guy. Like
Yeah.
my last stint in XR was a decade long. And again,
Wow.
it was a repeat of this, like taking a technology that's in its infancy, but trying to get enterprises on board and succeeding in that
Right.
line of work. Right. So, and me and my co founder couldn't think of anything that doesn't take a decade to crack. Right. So, maybe our weakest point as well. But yeah. So,
Well, I
this
think those are the hardest technologies, right, to develop because that's where you get the highest upsides too, right?
absolutely.
Because if it is anyone's technology, then it's just easier to replicate, and then it's a very
Absolutely.
hard
Like you got to keep
environment.
looking over your shoulder,
Yeah.
right? But yeah, so this happened and what change in the future that we saw coming is that we feel people are going to spend a lot less time being online,
Mhm.
right? Because AI is coming after every single reason we are online for. We were online for learning, which ChatGPT now throws up the result
Yeah.
in a matter of milliseconds. We were online for researching about what products to buy. Again, LLM does that for us now. We
Yes.
were online to book our travel. LLM does that now.
Yeah.
We were online to respond to emails, which LLM does that very well now,
Yeah.
right? So if you extrapolate this curve into a few years into the future, I think there's honestly not many reasons for us to be online anymore. And when that happens, brands miss out on one of the largest digital marketing channel, which is search and your website ads, etc.
Yes.
Right?
Yes.
Even in terms of social, to be honest, I don't trust anything that's on my Twitter feed anymore, X feed anymore.
I agree. I have to agree with that.
Yeah, like even if it's text, I know it's written by ChatGPT. I could even reverse engineer what prompt they might have put in. So the social channels are losing their
Yeah.
sense of authenticity. And I believe the best place to catch Andre's attention would be in the real world than
Yeah.
the online world, right? And I mean, Andre is the real Andre, is not the AI agent of him.
Exactly. I totally agree with that. I think ever since like AI came out, I feel like we are bombarded with like so many ads, like so many things that you don't even know if they're real anymore. I looked at Twitter and I see these like generic response, and I'm like, you can tell this is AI. It's not really someone
Yeah,
writing it. And similarly with like the other platform as well. Like you see like all these ads being bombarded all the time, and quite frankly, I want to say the professional website, and it's
Yeah,
just all
it's
AI. Like I'm not even interested anymore
nauseating,
to go in
right?
and look anything, because I know
Absolutely.
they're gonna get like a very genetic response.
Absolutely. And even in terms of search, right, when was the last time you went down the rabbit hole of the second and third page result in Google? You don't. These are things that brand used to pay
Yeah.
for to come up on the top five. But we
Yeah.
don't value that anymore. We just settle for the Gemini answer.
Exactly. Exactly.
And extrapolate this, few years into the future, and you're gonna see that you don't even go online anymore. You just ask your ChatGPT agent, and it's gonna find you the results. So I see a disruption in the online world, and I think we humans will finally spend more time in the real world, looking up and paying attention, and that's where brands should meet them.
Exactly. That makes sense because like every time I'm driving, I pay attention to these like huge billboards, right? Because you see everywhere, AI for this, AI for that, and I found myself like going whenever I have a laptop and I remember the billboard, I'm gonna start looking up that like that company. What are they offering?
Absolutely.
What's their solution? Can I use that for my current software as well? It just hits the spot for me because not only we're in tech, but also we're always trying to sort of search for the best solution that works with our software as well. And I think there's a huge value proposition for that.
Absolutely, Anders. In fact, if you notice something about this is it actually affects your decision taking as well,
Yes.
positively. For example, Dell mentioned that a senior business leader trying to onboard Dell had to convince his VP in a particular meeting about Dell, and
Hmm.
VP is like, "Oh yeah, I saw them on the way here to the office, and
Right.
yeah, let's go ahead." Right, and what that means is people subconsciously treat OOH as a layer of credibility. Actually exist, especially in an age where it's easy to fake the existence.
Yes. Yes. Wow. Interesting. And can I ask you, in terms of like, you see like all these billboards, right? They're owned by different companies. I'm not familiar with the industry, but are they owned like by different companies, or is it like one monopoly that owns X amount of billboard in a certain area? How is that,
So it's not a monopoly; it's quite far from it. But
Okay.
the inventory is consolidated between the top five players,
Okay.
and a good share of the inventory also is owned by individuals. Right now,
I
this is a
see.
challenge for the agencies themselves because the plan they put together need not be from just one inventory owner. It could
Right.
be a multi-party inventory owner,
I
and hence
see.
they need to negotiate with quite a few different people. So it's both a good thing in the sense that it kind of like it makes the market be more fair and rational. But it is a challenge in terms of the process that goes into booking a campaign.
I
Right.
see.
I would say 80% of the market is consolidated, 20% is with individual independent inventory owners.
And so who is like your day one customer? Let's say you got your product ready to go, and who you go to and sell it to, and that's one my first question. And then my second question is like, who make that decision within your, I guess, within your clients? Like, is it a CMO or is it like a director of marketing? Like, who is it?
Perfect. So, from a day one customer point of view, it's going to be the agencies,
Okay.
and the exact role would be like account coordinator or account owner,
Okay.
or even in some cases, if it's a smaller agency, the CEO themselves, because they're
Okay.
responsible for the efficiency of the team. The brands are important in the entire life cycle because we want brands to begin expecting the campaigns to be run on Do This in the future, right? The value of trust that comes
Yeah.
into the equation has to be put forth by the brand. Hey, can you ensure the campaigns that run on Do This? Because
Uh-huh.
not only are we offering just the planning tool for the agency, we also offer a module where agencies could share the selected plan to the brand
Yeah.
inside our platform, and the brands could ask our AI questions about the campaign's effectiveness, right?
Hmm.
And we'll make the case for it with a neutral
Okay.
approach. Earlier, all this used to be a very manual approach. So brands ask agency, okay, why have you suggested this plan for us? And agencies have to go around giving the defense of each inventory that they've chosen, right?
Okay.
Obviously, this did come up with its own transparency issues, right? Or the vested interest issues, which we are, looking to solve using our platform.
Hmm. Hmm. Wow, that's interesting. If I'm a, like, let's say I'm a corporation, like if I want to go and get your service, do I need to go through an agency, or can I just contact you guys directly and then just through you maybe pick an agent?
Yeah, so we would still suggest an agency to be on call. Okay, let's
Okay.
take a step back, right? The OOH budget is usually part of the MSA that the brands have already signed with agencies, right?
Right.
How the agency world operates is each brand signs an agency
Okay.
partner as their, the marketing agency, right? And that would include the MSA value, would include the entire media buy spend as well. And
Hmm.
that media buy would contain the digital marketing media buy and also, of course, OOH media buy, among
Okay.
other things. Right. So we are targeting the pie that's inside the entire agency budget.
Right.
So we do work with agencies by default. But for
Hmm.
smaller brands, etc., like if it's a mom and pop store, let's say an ice cream shop downtown in Naperville,
Right.
they could go on the platform and self-serve themselves. But that's not our go-to-market strategy as such.
Okay. Understood. Okay, that makes sense. The O, correct me if I'm wrong. The
Yeah,
OOH is
yeah,
the outside of home,
yeah.
right?
Out of home.
Market.
Yeah,
Out of
out
home.
of home.
Okay,
Yeah,
perfect. Because all right, I'm not a
yeah.
marketer, as you can tell.
No, no, absolutely. That's not
Okay,
that's
so
not a
that's
problem
the
at all.
concept, and that includes basically anything, any type of like marketing, billboards. Is it does it include anything else?
Yeah,
That
like the name says, is anything out of home. So you
okay,
catch a bus, you're exposed to
I
a lot
see.
of inventory inside it. You
Right.
catch a BART, there is inventory inside it and outside it, in the stations. You read a newspaper, it's in there, right? So it covers anything that is not served on a smart device.
Okay, that's interesting. That's a
Yeah.
huge market.
And that's also, the funny thing, or rather the interesting thing, Andres, is for search, you have Google, which is the portal for all of your search ad spend.
Yeah.
For social, you have Meta predominantly.
Yeah.
Of course, there are players like X and LinkedIn. Commerce, you have Amazon, right? But for OOH, which is, I would say, is the ad layer to the real world, where your monthly active users don't have to be manufactured. Like,
Hmm.
you don't need to make viral content to have users in this medium, which is the real world,
Exactly.
right? People already thrive here. Engagement's already happening. The monthly active users is already the peak that it could be,
Right.
right? And yet it doesn't have a portal to it.
I see. I see. And have you guys, how far along in the process are you guys right now with the
It's an
product?
interesting place we're in. So we have the products tech demonstrator ready. We are onboarding both inventory and agencies onto the platform.
Okay.
Like we are raising a pre-seed fund as well.
Hmm.
So it's an interesting time to be. Yeah.
That's great. And now we briefly talk about your round, but if you want to share anything from your perspective, have you? I know you have VC conversations as well. What's your observation? What's your perception at the pre-seed? Because we're both pre-seed actually. Then I can share as well my insights. But anything that caught your attention raising from VCs in the Bay Area?
Well, a lot. I mean, I'm glad I made the this decision to spend a quarter here to try and raise for us, and of course work with our clients as well. And what this last few months have taught me is that revenue is paramount even at pre-seed
Yes.
stage now.
Yes.
Right? It might sound like an oxymoron. Hey, it's pre-seed. Why is revenue even in the picture?
Yeah.
But it makes sense from the investor's point of view that they want to optimize their chances of success at this time, especially when there's a lot of supply of ideas and platforms out there for them to pick where they want to bet. It makes their life easier. But
Yes.
at the same time, I think I think we are past the hype curve with respect to AI powered companies. That we are now having investors who are looking for reasons to reject an idea,
I see.
right?
Interesting. Okay.
Yeah, and the topmost reason seems to be revenue,
Revenue.
right? And
Yeah.
yeah, I don't think we are in the boom cycle of anything with the word AI on the deck gets funded without a
Not
meeting
anymore.
or without not anymore, right?
That was 2 years
And
ago. Not a not
yeah, that
not
is two, it's 2 years ago. Yeah, so long before we even thought about this, right? So yeah,
yeah.
this is the
I
cards
agree.
we dealt with. Yeah,
I think the primary concern or differentiator, even at pre-seed right now, is having like some revenue. Even if you don't have to have a million ARR to raise, like some revenue. I had a conversation with VC and they said even if you have like 3 or 4 contracts and making like 40, 50K MRR, like that's enough, to have some traction. One thing that I also I've learned like just recently going to fundraising too is that the LOIs are actually, those are letters of intent, but they're not as strong as they used to be. Like I had like one VC saying to me like, yeah, LOIs are fine because we do have like 6 or 7 LOIs right now. But those are not yet contracts. So we want to see like a full MSA, like a full contract. And if you're a pre-product, you probably don't have, a full product to have a contract yet. But the fact that you have intention, you have talked to customers and they have expressed their interest in an ideal world to me is like, okay, this guy is at least having some traction. But there is a strong preference towards having some sort of revenue, even at
Yeah.
a pre-seed level right now.
I think I'll say it out loud that LOIs don't mean anything right now,
No.
right? I think we learned that as well in the last few months. Like you said, if you're so the way our platform works is we need both the agencies and inventory on board for
Right.
the transaction to happen.
Yeah.
And that's been a challenge because agencies expect the inventory to be onboarded, and
Mhm.
inventory owners would want to
Right.
see revenue estimations and promises in place for the integration to happen.
Right.
Right. And this is like a chicken and egg problem for us. But thankfully, we've gotten few inventory owners on board, and we are looking at starting the transaction through our platform mid of next month.
So how do you go about, like, you mentioned the chicken and egg problem. I think a lot of people building yours is kind of like a marketplace too, right? Building in that marketplace industry, they do seem to have the same problem. How do you go about managing? Do you focus more on like the supply side or the demand side, like to get your started, right?
I think it's a balance of both
Okay.
because it's important that you make cover grounds in both the demand side and the supply side equally.
Okay.
But I think the very first sale that you're going to close is going to come from people who trust you and not the product yet,
Yeah.
right? Earlier, it used to be that, okay, the investors are, investing in you and not the product. But now that they are focused on revenue, that's no
Yeah.
longer the case. The early customers are trusting you and not the product, right?
Right.
So that's where I think our relationships that I've built over the last 10 years with agency partners, etc., came handy.
Yeah.
And we are also able to make some ground in inventory ownership as well. Maybe not in the US. So, for example, the inventory progress that we have made is all in Dubai and Middle East,
Mm.
back in India. But like I said, if they want to
Those
see
are big markets though. Like those
it
are
is. It's like
really,
out of the home. It's a
yeah.
global market, right?
Yeah.
And to be honest, Dubai is a fantastic city to launch, if not in the US, right? Because it's as heterogeneous as New York City,
Yeah. Yeah.
right? It has all kinds of people spread across the city in various hubs, so it makes a lot more sense to fall back into that platform to show this early revenue.
Hmm. Hmm.
So we were lucky to make some progress there. Of course, we pulled all strings in terms of the relationships that me and my co-founder had, both professionally and personally, to make such progress.
Right.
Like I said, pre-revenue, pre-product, the only thing that you have is yourself.
Exactly. That's exactly what it is. I think, for like all the founders out there that I've, me that are pre-seed as well, pre-product, pre-revenue. If you want to fundraise, personally, what I've observed is like you need to go to accelerator, either here or somewhere else. But a lot of the folks are like going to any accelerator right now because those are the ones that technically fund founders with just an idea or maybe just pre-product or pre-revenue. But it's also getting hard to get into accelerator. So have you guys tried any accelerator here or
Absolutely. I mean, starting from, you know who, and we,
the big one in the Bay Area?
yeah, everybody knows them. So the thing about accelerators is one, the odds of getting in is quite against you by the virtue of the supply, right?
Right.
So San Francisco especially has a huge supply versus a standard demand in terms of the venture funds.
Yeah.
There's a lot of entrepreneurs out there and a fixed number of VCs out there. Especially being, entrepreneurs, earlier as well. The only value we could think of that we could extract from incubators is the connections. Right?
Yes.
Quite honestly, with the current odds of getting in, it's not wise to plan with accelerators as your plan A. It's something to treat as a good to have, right?
Exactly.
So our plans are unaffected by the whether we get into the accelerators or not.
Yeah. I honestly think that's the best attitude because, like, for me as well, for me and my co-founder, we applied to YC and our accelerators here, but our focus is always on the customer. Just getting the product out to the market, like, onboarding as many beta users as we can, and honestly, I think that's the way to really prove that your startup is gonna get somewhere at some point. It just takes time. What I think that the accelerator and incubator does right now is like they really just accelerate your time into like
Yep.
the
Like
short.
accelerating zero is still zero.
Exactly.
Yeah.
But I actually met founders that getting into the next batch for YC, and they literally have like no product, like no revenue. Maybe they have like, two lines of code, and then they're getting in. But it's gonna put them in a better position in a shorter time. But, for everybody else, there's a ton of VCs there that fund any idea that has a traction or some sort of traction. And the good thing is that traction can be defined many different ways as well, because revenue, obviously, ideally you will have revenue, but traction can also mean you have unpaid customers. Like I've seen a lot of founders that I met in the Bay Area having like, 10 unpaid customers, just giving them feedback and they actually get funded, and at a pre-seed level. Not a big pre-seed amount though. You've seen like these people raising like 10 million at pre-seed. That's crazy. But it's a small amount that, allows them to maybe hire one or two more employees to accelerate their products. But yeah, it's a process and it's a grind for sure.
Absolutely. I think, especially given the fact that the PCs also come with their own the accelerators also come with their own time of response and feedback, right? It's not wise to actually wait for them to get back, like, okay, I will continue only after I get a response from so and so PC,
Yeah,
the accelerators. But here's the thing, right? As an entrepreneur, your journey is defined by how many no's you can take.
exactly.
So you got to keep working on, okay, if this door's closed, I'm going to go and chase something else, etc. As long as it moves me a non-zero percentage ahead
Yeah.
from where I am today. Probably the first time that you're hearing no's in your professional life, right? It's not
I never
often.
heard so many no's this year. I'm telling you,
Yeah.
in one single year. Like,
Yeah. I think that's something, especially if you have, a former
yeah,
entrepreneurship experience, that really helps. Like it makes you kind of
yeah,
immune to say, to hearing no's. But in fact, that's the amazing part of starting up as well, is that when things do, work out, it's gonna be funny to, think back about all the no's you got.
yeah, yeah. No, that I agree with that. And anything you can share with your, I know you've been in the Bay Area for a few months now, but anything that surprised you from the Bay Area, maybe like founders that you met, VCs that you met, anything that unexpectedly, surprised you about the ecosystem here?
Well, that's an interesting question. It might be having to do a lot with the current scenario of people expecting revenue, but one
Uh-huh.
thing that I was a surprise was the marketing copy on the website is nowhere near the reality of what those investors prioritize,
Oh, really? Okay.
and that's a good thing to know because the website might say we are the founder's first check, we are the founder's idea partner, etc.
Yeah.
But that's not the reality, right? And the sooner you realize that, you're gonna have a more realistic approach in terms of your expectations. So that was a surprise, and also that I think all of this boils down to the fact that they have to choose their bet out of 1,000 people who are applying to them,
Mhm.
right, or 10,000 people who are applying to them. So it makes sense in the real world. But if you're someone like me who started the research before landing up here, and expected to have some conversations happening, it's going to come as a shock to which you got to pivot like on the fly.
Yeah, yeah, I agree. I think those what I've came to realize is that those like that said find you with just an idea or pre-seed whatever, they find
Nope.
people that no, they found people that were like second time founders, people that they
Yeah.
know that have some histories in
With
startups
an
like
exit. That's
with an
the keyword, right? With an exit.
but
Yeah.
it's not really, the first time founder that is just starting and no, that's really not the case. And
Yep.
and I think, one of the things that I think all the first time founders or like any founder that is getting started, like they should just focus on like the traction, and their product and
Absolutely.
and go to market. And that's how you would attract VCs. Because something I also realized, I went to like so many events in the Bay Area and VCs are not there. There's always the ratio with VCs and founders. There's always more founders than VCs. And then once you met the VCs, they're probably not your fit because maybe they just invest in specific areas, specific
Or not the same
industry,
stage that you're
but
looking
not the
at.
same stage. They only invest in Series A, they only invest in people that have like maybe uh technical founders and things like that. So there's so many criterias that once you start playing that game, you start realizing that, oh, it's not as simple as you thought it would be. Or even though they say they're, supporting pre-seed with just an idea, not really.
In fact, one thing to focus on, Andre, is people do respond. Like investors do respond to your reach
Yeah,
out, even if it's a
that's
cold
true.
reach out and there's no warm interest involved. I wouldn't say lack of response is the concern, but it's just that when they get on a call, they are going to expect revenue, right? So you better be prepared for that.
Yeah. And have you guys raised in Dubai or in India on any other places?
We are right now in progress.
Okay.
Thanks to this experience of last few weeks here in the
Yeah.
Bay Area and the conversations here, we realized we're going to go back to the drawing board and raise back in India and Dubai to service the LOIs that we have, convert them into revenue, and then
Right.
have another jab at the investors here in the Bay Area again.
Right, because like you guys are incorporated here as well, right? In the US.
Yes. Yeah,
Okay. So if you guys raise in Dubai and back in India, you may actually not need to come here for a pre-seed or seed round. You may actually come here for a seed round, perhaps. Yeah, Series A.
absolutely. Absolutely. It's just that US is the focus of our GTM
Mm-hmm. I see.
because a good 50% of the global OOH market is in the US cities.
Oh.
But that doesn't mean the other, the non-US market is of lesser value. Like I said, it's definitely part of a strategy to start there now that the US go-to-market is delayed by a
Mm-hmm.
few quarters.
Okay, interesting. And what about the market in India?
It's an interesting market, Anders. Have you been to India?
I never been to, but
You should.
I'm curious. I'm very curious. Like I work
Okay,
with a
you're
lot of
gonna ping me
people.
when you're planning. Okay. So India is an upcoming market for the OOH industry, and I say
Okay.
upcoming because earlier, a good 15 years ago, there was a very big OOH market, but it wasn't regulated, right?
I see.
And India is a country that starts with a blanket ban
Mm-hmm.
and then understands the market and
Mm-hmm.
then starts introducing regulations. So I like to say this, right? In America, everything's legal until said otherwise. But in India, everything's illegal until said otherwise.
Oh,
So that is
okay. It's controlled by the government in a way.
Yeah, I mean it's a country of billion people. Things can go wrong if you don't control it a little bit, right? So
Mhm.
makes sense. Why would the governments would like to do that? So only now in the last few years they've started to open up the regulation in a much more enthusiastic manner, right?
Okay.
Earlier the only assets were in airports or terminals, etc. You weren't able to see many of them in the city that were legal, right?
Hmm.
So the regulation is catching up and the market is growing because of that. But India, I think what's due is the standardization. I'll give you an example. Every single OOH asset that you see in the city of San Francisco will be the same specification that inside the city.
Hmm.
So they're highly standardized. You know what you're getting, etc.
Right.
But in India, we lack such guidelines as of yet. It's being implemented across the country, and there's also the challenge of inventory that's outside these regulations that are also fighting for the same market share.
Hmm.
So you have to leak your money, leak the platform f- uh, for those inventory as well. So it's kind of a challenge in India at this moment, but India will catch up. But India is not a priority one market to begin with.
Okay. And you're saying also like what about margins? Like, have you guys in terms of like margins, where you know your cost, your revenue, where is that like sweet spot for you guys? And I'm assuming
Uh,
there is also like a high upfront cost for you guys to run this, right? Or not?
Not really, right? So we are a marketplace, and we are essentially a database with an intelligence layer.
Right. Okay.
So the upfront cost is only the server infrastructure
Okay.
and the cost of talent to build these platforms, which we are leveraging the Indian background of the founders, right? So we have a very evolved and mature tech engineering ecosystem
Yes.
back in India, which we're leveraging to build the platform. But of course, from a margin point of view, we are yet to realize what our absolute ceiling will be, right? But there's always room for growth, right? Especially when you engineer out of India, but for the world.
Right, right. Wow. Well, this is great. I mean, I think the idea is fantastic. I will personally like actually buy it. I use your
Thank
service
you.
when I can and when I can afford marketing. But it was a great conversation. I don't know if there's anything you wanna discuss or say.
Nothing else, Andres. Happy to answer more if you have more questions.
I there is one question I have in terms of technology. And you see like all these agents right now that are evolving so fast and people are trying to catch up to the next agent. Is there anything like any agents that you are building to incorporate to your platform? And how do you go about training those? And is there anything on the AI side, or more so like on the agent side actually, that you guys are incorporating?
Two answers to that, Andres. Yes, we are incorporating all the leading frontier models into the platform, right?
Hmm.
But we bring in our own intelligence and guidelines and guardrails for how they should be leveraged to bring the
Okay.
consistent results that we're looking for the planning side. But we are looking at a future where the world shifts to a bring your own agent model, where enterprises plug in their Gemini account or OpenAI or even
Right.
Grok or Llama to feed these platforms, because I think in the near future AI will become the same level of infrastructure as internet.
Hmm.
Like, LinkedIn doesn't provide its own internet, right? I mean, you got to plug into your own infrastructure and then leverage that to access LinkedIn. I think the models will shift to that layer very soon, and we are seeing that trend in some of the platforms that let you plug in your own models to it.
Yeah. Yeah. Interesting. Okay.
But ours is the intelligence layer on top of the model, like the OOH intelligence layer that we have designed on top of the model, and that model is swappable. I think in terms of the expensive side, it's a matter of context and the value in which what you're replacing, right? So when you're looking at shrinking a 60-week journey down to 5 minutes and less, whatever the cost of the model is worth it, right?
And in terms of your your plan to make revenue, I'm assuming there is some contracts there involved. Like you guys expecting to have a subscription base, like contract base.
Ours is the usage based, Andres, in the sense we pick up a value, a percentage of the media buy,
Okay.
because our value also is the entire media strategy as such. So this is the same model that the agencies work on as well. They're also paid a certain pie of the entire media buy value. So we're replicating that. And of course, there will be the seat-based pricing and the credit-based pricing for the usage. But if you think about it, AI works against the seat-based pricing model, because
Yeah.
if your platform does its job really well,
Mm-hmm.
the seats won't grow.
Right.
If anything,
Right.
they'll shrink, right? So seed based will be the wrong lens to look at it. But seed based is only there to ensure there's some control over, the usage in terms of the compute cost for us.
Yeah. Yeah. And how many, in terms of like projection, how many, I guess you guys have some LOIs right now. Hopefully you guys will convert more people into, the contract. Does that give you like enough leverage, let's say, like to run your business? Or will you need to raise funds in order to
Yeah, I
continue?
think Anders, the question is, running a company is different from scaling a company.
Mhm.
Right? Yes. If you ask me, whether can I run using just the revenue for the initial years? Yes. But will
Yes.
we be able to fund our war chest and go ahead with the GTM and scaling
Right.
and defending these customers and the market share? That's challenging. Yeah. And that's the entire point of venture capital, right? So to give you that moat
To give you
in
that
terms
fuel
of,
to start
yeah,
raising once you start having traction and start having revenue.
yeah,
All right. All right, man. I have a great conversation with you. I don't know if there's anything you want to add here, but I appreciate your time and coming on this show. Hopefully, this podcast grow to the point that you know there's people that investors that watch these and then they look at you and they can contact you, even users, or
happy to
and
talk about us, Andres. Yes,
but I would love to follow up with you, in a few months to see how things are going and maybe
absolutely.
progress.
This will be
But
fun to look at.
for sure. Like this is exactly what I'm doing this because I wanna, to in a few years I wanna go back and say, hey, I interviewed you back then, and the guy's like a crack right now and killing in
And
Silicon
I could say
Valley.
I got interviewed by Andres. Yes,
All right, man.
lovely.
It was great seeing you again, and best success for you and your company.
Thank you, Andres, and same to you as well.
Thank you.
Yes. Bye.